Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today we will discuss about the income tax. Overview of income tax in India. Overview of income tax in India. In our previous class, we have understand the introduction of income tax. The introduction of income tax. Now we will understand overview of income tax. Overview of income tax in India. So now we will start our discussion on such topic. Overview of income tax in India. Component of income tax law. Now, first we will discuss the component of Income Tax Act or Income Tax Law. Number one, Income Tax Act. Number one is Income Tax Act. Number two is Annual Finance Act. Number two is Annual Finance Act. Number three is income tax rules. Number three, income tax rules. Number four, circulars and notifications. Circulars and notifications. Number three, legal decisions of courts. Legal decision of court. These are the component of income tax law. Means the income tax law is a very wide law and it will contain income tax act. It will contain annual finance act. It will contain income tax rules, circulars, notifications, legal decisions of court. So these are the component of income tax law. These are the component of income tax law. First, we will discuss Income Tax Act 1961. Now we will discuss each of the components separately. So the first component is Income Tax Act 1961. The In India, the income tax is levied by the government. The In India, income tax is levied by the government and the income tax is governed by Income Tax Act 1961. In India, the Income Tax Act is governed by Income Tax Act 1961. In India, such tax or such income tax act is applicable to whole of India. The Income Tax Act 1961 is applicable to whole of India. It is applicable everywhere in India. It is applicable everywhere in India. And the Income Tax Act 1961 came into force on 1st April 1962. The Income Tax Act 1961, it is applicable whole of India and it came into India on 1st April 1962. Means the Income Tax Act 1961 is applicable from 1st April 1962 and the Income Tax Act contains 1 to 298 and schedule. The Income Tax Act contains section 1 to 298 and it contains schedules and Income Tax Act contains schedule 1 to 14. Schedule 1 to Schedule 14 is that in India, the income tax is governed by the Income Tax Act 1961 and the Income Tax Act 1961 is applicable whole of India. It is applicable whole of India and it is applicable from 1st April 1962. The Income Tax Act contains 1 to 298 sections and it is contained first schedule to 14th schedule. It is contained first schedule to 14th schedule. 14th schedule. Number one point in the respect of Income Tax Act 1961. A section may have subsection or clause and subclause. A section is divided into three parts. A section will contain subsection or clause and subclause. A section will contain subsection or clause and subclause. The section may have provisos and explanation. The Income Tax Act 1961 contains sections. The Income Tax Act 1961 contains sections, and the section may have subsection or clause or and subclause. Subclause. The section may also have proviso and explanation. And explanation. In Income Tax Act 1961, there are the many provisions which are required to be changed year to year basis. Is that under the Income Tax Act, there are many sections which are required to be changed year to year basis, means there are some acts, or sorry, there are some provisions or there are some sections which are required to update, or in the respect of those sections some additions and some changes are required, and these changes and these additions brought in by the Annual Finance Act. Every year, a particular or a proper finance act passed by the parliament, and such act or such finance act which is passed by the parliament contains some changes and some additions in the existing provisions of the Income Tax Act. The Finance Act, which is passed by the Parliament, contains some changes and contains some additions in the respect of those provisions or in the respect of those sections which are given in the Income Tax Act 1961. For the example, for the example, mostly in each of the year there is a change. There is a change in income tax slab rate. Income tax slab rate mostly change year to year basis. So in this case, these changes are introduced by the Finance Act. All these changes are introduced by the Finance Act year to year basis or on the basis of requirement. As such Finance Act, Annual Finance Act is passed by the Parliament. It is passed by the Parliament. Sometimes the state legislature also amend the provision of Income Tax Act. The state legislature also wants to amend some provisions, then they can amend, or the state legislature can also amend the provision of Income Tax Act 1961 through the legislature, like Taxation Law Amendment Act 2019. The Income Tax Act 1961 contains provisions. It is contains sections, subsection, clause, subclause, and section may also have proviso and explanation. And in Income Tax Act 1961, there may be some changes or some addition made by the government year to year basis, and these changes brought in by the Annual Finance Act, and the Annual Finance Act is passed by the Parliament. Sometimes, as per the requirement, the state legislature can also amend any of the provision of Income Tax Act 1961 through the legislature, like Income Tax Law, Taxation Law 2019, Taxation Law Act 2019. So, in the case of Income Tax Act, the provision may be changed, or some additional provision may become into force by the Annual Finance Act. And such Annual Finance Act is passed by the Finance Minister every year. Number 2, Finance Act. First, we have discussed Income Tax Act 1961. Income Tax Act 1961. Next is Finance Act. What is the Finance Act? What is the Finance Act? Every year, the Finance Minister of Government of India introduces a finance bill. Every year, the finance minister introduce the finance bill in the parliament. In the parliament, every year a budget is prepared and introduced by the finance minister in the parliament. When the finance bill is passed by both house of parliament, when the finance bill which is passed, or sorry, which is introduced by the finance minister of government of India, and when such a finance bill is passed or accepted by both house of parliament, both house of parliament is Lok Sabha and the Raj Sabha. When the finance bill is accepted or it is passed by the Lok Sabha as well as the Raj Sabha, then it will be there and it gets the consent of the president, and when it gets the consent of the president, then it will become finance act, then it will become finance act. Is that for the example, there is a finance bill, there is a finance bill, it is introduced, it is introduced by the finance manager, and when such a bill, when such a finance bill when such a finance bill accepted or passed by both house of parliament, both house of parliament, then it will become, it will become finance act, finance act, then it will become finance act. So when there is any finance bill and the finance bill is introduced by the finance bill is introduced by the finance minister, and when such finance bill, when such finance bill passed by the, when such finance bill passed by the or accepted by the both house of parliament, and get consent, and get the consent, sorry, consent of president, and get the consent of president, then such a finance bill, then such finance bill will become finance act, then such finance bill be, then such a finance bill become the finance act, it will become finance act, it will become finance act. So every year a finance bill is introduced by the finance minister in the parliament. When such finance bill is passed by the or accepted by the both house of the parliament, and it gets the consent of the president, then such finance bill become the finance act, then it will become finance act. Amendments are made every year to the income tax 1961 and other tax laws by the finance act. When such finance act, when such finance act or when such finance bill accepted and it will become finance act, then all the changes and all the changes, and if there is any additional, if there is any additional tax or provision or law, then it will be applicable, then it will be applicable for the particular financial year. All the changes, all the amendments, or if there is any new provision, if there is any new provision, then such provision will be applicable from the financial year, it will be applicable from the financial year. The first schedule to the Finance Act contains four parts which specify the rate of tax. The first schedule, the first schedule of the Finance Act means the finance bill which is accepted by both house of parliament and which gets consent of the president, then it will become finance act. The finance act, the first schedule of the finance act contains four parts. These four parts specify specify the rates, specify the rate of taxes. Is that the finance act finance act in the finance act, the first schedule contain four parts. These four parts specify the rate of tax. Specify rate of tax. Part all these four parts of the first schedule of Finance Act specify the rate of taxes. Specify the rate of taxes. Part 1. Part 1 of the first schedule of the Finance Act. Part 1 of first schedule of the Finance Act specify. It is specify the rate of the income tax, which is applicable for the current assessment year. Is that part 1 of first schedule of the Finance Act specify the income tax rate which are applicable for the current assessment year, which is applicable for the current assessment year. Accordingly, part 1 of the first schedule, accordingly, the first schedule, part 1 of first schedule to the Finance Act 2020 specify the rate of the income tax which will be applicable for the assessment year 2020 and 21. Is that part 1 of the first schedule of Finance Act contain and specify the rates of tax which are applicable for the current assessment year, which is applicable for the current assessment year. For the example, the Finance Act 2020, Part 1 of Finance Act 2020 will contain the provision or will contain the rates which will be applicable for the assessment year 20 and 21. Part 2. Part 2 of a schedule of Finance Act contain or specify the rates at which tax is deducted as source. Means part 2 of the first schedule of Finance Act contain the TDS rate. It contain the TDS rate which will be applicable in the current financial year. Part 1 contain the rate of tax which will be applicable for the current assessment year, and part 2 specify the rate of the TDS which will be applicable for the current financial year. Accordingly, part 2 of the first schedule of the Finance Act 2020 specify the rate at which the TDS, at which the tax is deductible at source for the financial year 2021, 20 and 21. Part 3. Part 3 of first schedule of Finance Act gives the rate for calculating the income tax for deducting tax from income which will be chargeable under the head of salary and computation of advance tax. Part 3 of Schedule 1 of the Finance Act contain the rates and specify the rates for calculating the income tax for deducting tax from income which is chargeable under the head of salary and for the computation of advance tax. Part 4 of first schedule of Finance Act gives the rules, it provides the rules for computing the net agriculture income. Part 4 of the first schedule of Finance Act contain the rules for computing the net agriculture income, to compute the net agriculture income. So Finance Act in the Finance Act, the first schedule contain four parts. Part 1 prescribe the rates of taxes which are applicable for the current assessment year, which is relevant for the current assessment. which is relevant for the current assessment year. It is contain rate of tax. Part 2. Part 2 contain the rates of TDS which are applicable, which will be applicable for the current financial year, which will contain part 2 contain TDS rate which will be applicable for the current financial year, part 3. Part 3 contain the rates of tax rate of tax to calculate sorry to calculate tax on the income which is taxable, under the head of salary, and calculation of advance tax, which is contain the tax rate for calculation of advance tax, part 4. Contain the rules. For calculate the to calculate agriculture income. Means part 4 of first schedule of Finance Act contain the rules how to calculate agriculture income. So these are the 4 part of first schedule of Finance Act. These are the 4 parts of first schedule of Finance Act. Now we will discuss income tax rules. What are the income tax rules? 1962. Income tax rules 1962. The administration of the Income Tax Act is looked after by the Central Board of Direct Tax. Means that the administration of the direct tax is done by the, or it is taken, or it is made by the CBDT. The CBDT is a authority which administrate the direct tax. The CBDT administrate the direct tax. The CBDT is empowered. The CBDT has the power to make the rules. Is that Parliament and the state legislature has the power to make law, and CBDT, Central Board of Direct Tax, and the Central Board of Direct Tax has the power to make rules for the purpose of Income Tax Act 1961. The CBDT can make the rules according to the requirement for the purpose of Income Tax Act 1961. For the proper administration of the Income Tax Act 1961, the CBDT frames rules from time to time basis. For the proper administration of direct tax, the CBDT makes or frame rule time to time basis. And these rules are collectively known as Income Tax Rule 1962. Means all the rules which are introduced by the CBDT are collectively known or are collectively called Income Tax Rule 1962. So the CBDT is an authority which has the power to make the rules of Income Tax Act 1961. These rules are made by the CBDT for the purpose of proper administration of Income Tax Act. For the proper administration of Income Tax Act, the CBDT framed the rule time to time basis. And The rules which is made by the CBDT collaterally known as income tax rules. It is collaterally known as income tax rules. 1962. The rules are also divided sub-rules. The rules are divided into sub-rules, just like section. Sections are divided into subsection. Then the rules also divided into sub-rule, proviso, and explanation. The rules are also divided into sub-rules, proviso, and explanation. The proviso to rule and sub-rule spells out the exception to the limit. The proviso of the rule and the sub-rule explain the proviso to rule and sub-rule spell out the exception to the limit. It contains conditions, it contains guidelines and basic of valuation as the case may be. These rules and the sub-rule provide exceptions, conditions, guidelines and basic of valuation. The explanation gives clarification for the purpose of rule. The explanation provides clarification about such rule. Means it is clarify what is the rule and what is the purpose of such rule. What is the rule and what is the purpose of such rule. In the case of Income Tax Act 1961, it is important to remember that, or it is important to keep in mind that along with the Income Tax Act 1961, these rules should be studied. Is that in the case of Income Tax Act 1961, it is important or it is keep in the mind that these rules are required to be followed or required to be studied with the Income Tax Act 1961. Means if you are using any of the provision of Income Tax Act 1961, you will also consider the rules which are relating to such provision. So the CBDT has the power to make the rules. Central government and the state government has the power to make laws, and the CBDT for the purpose of administration of Income Tax Act 1961, it can frame rules time to time basis and all the rules collectively known as Income Tax Rules 1962. The rules also contain or divided into sub-rule, proviso, and the explanation. The rules are required to be read with the Income Tax Act 1961. So this is the Income Tax Rules 1962. Now we will discuss circular. Now we will discuss meaning of circulars and notification. What is the meaning of circular and the notification? These all are we are discussing component of income tax. The next is circular and notification. Circular are issued by the CBDT. The circular are issued by the CBDT time to time basis, deal with a certain specific problem. The circulars are issued by the CBDT time to time basis so that we can solve or we can deal with the specified problem and we can clarify the doubts regarding the scope and the meaning of certain provision of this act. The circular are issued by the CBDT Central Board of Direct Tax from time to time basis so that we can deal with the specific problems and specific doubts or specific problem or the we can clarify the doubts which are relating to the any specific provision. For the example, there is a provision, and in the respect of such provision, there are some doubts. In the respect of such particular provision, there are some doubts. So, to clarify, to remove such a type of doubts, to clarify and to remove such type of doubts, the CBDT issued a circular so that the CBDT on the basis of such a circular clarify the such a doubt. Circular are issued for the guidance of the officer and the assessor. Means the circular are issued by the CBDT for the guidance of the assessee or for the guidance of the officers. The department is bound by the circular. The department is also bound by the circular, while the circulars are not binding on the assessee. The circulars are bind on the department, but the circulars are not bound. It is not binding on the assessee. They can take advantage of beneficial circular. The circulars are not binding on the assessee. It is binding on the officers or departments. The assessee, they can take the advantage of the beneficial circular. The circular are issued by the CBDT time to time basis so that we can deal with the specified problem and we can clarify the doubts relating to of any of the provision of Income Tax Act. The circulars are issued for the guidance of the officer and for the guidance of assessor. The department is bound by the circular, but the assessee is not bound by the circular. The assessee, he can take the benefits. The assessee, he can take the benefit of the circular. The assessee can take the advantage of any of the beneficial circular. Notification. What is the meaning of notification? Notification are issued by the central government. Notifications are issued by the central government to give effect to the provision of Income Tax Act 1961. The notifications are issued by the central government. The main objective to issue the notification is to provide the effect or to give the effect to the provision of Income Tax Act. The CBDT, the Central Board of Direct Tax, is also have the power to make and amend the rules for the purpose of Act by the issue of notification. Is that if the CBDT wants to amend any of the rule, or wants to make any of the rule for the purpose of this act, then by the way of notification, the CBDT can amend it or the CBDT can introduce any new rule. And such a rule or such an amendment or such a notification will be binding on both. Means the notification will be binding on assessee as well as on department. It will be binding on as well as assessee or on department. Is that laws are made by central government and state government. Okay, central government and the state government. Rules are made by CBDT. Rules are made by CBDT. Circulars are made by CBDT. Circulars are made by CBDT. And notification are issued by central government, or by central government and CBDT as per the requirement. So notification are issued by central government for the provision of Income Tax 1962. The CBDT can also make and amend the rules for the purpose of this act by the issue of notification. And such a notification are applicable or binding on both assessee as well as department. Now, what is the meaning of case laws? Another concept of income tax is income tax law is a case law. Case laws means decision which are given by the court. Case laws means that decisions which are given by the court, whether it is Supreme Court or it is High Court. The study of the cases is also very much important. The study of the case law is very much important and it is not avoidable. It is not avoidable if you want to know each and every provision and you want to study the Income Tax Act or the income tax law, then you should understand and you should study case laws. You can't you can't avoid any of the case law. It is not possible for the parliament to conserve and provide for all possible issues that may arise in the implementation of this act. The government or the parliament, the for the parliament, it is not possible to provide all the possible issues to provide all the possible issues that may arise in the implementation of this act. Is that when there is any debate or there is any dispute which is made between the assessee and between the department, then that decisions are given by the court, and such decisions are the very much important to applicable the provision of Income Tax Act or to study the income tax law, so that the decisions which are given by the court are also very much important to apply the provision of income tax law and to understand the provision of Income Tax Act. So the government, so the parliament, so the parliament provide or the government provide case laws, some case laws so that the person can understand about such concept or about such a provision. The Supreme Court is the apex court of the country, and the law laid down by the Supreme Court is the law of the land. The Supreme Court is in the India will be considered as apex court, and the law which is made by the Supreme Court is considered as law of the land. Law of the land, and the decisions which are given by the High Court and the decisions which are given by the High Court will apply in the respective state. The decisions which are given by the High Court will be applicable only for the respective state, not for the full, not for the all state. It is applicable only for the particular state, but the decisions which are given by the Supreme Court, it is when the any of the decision which is given by the Supreme Court will be applicable for whole of India. It is applicable for whole of India, not for the particular state. It is applicable in each and every state, but the decisions which are given by the High Court will be applicable only for the particular state or only for the particular jurisdiction. So this is the meaning of case law. So on the basis of proper discussion, on the basis of such discussion, we have understand overview of Income Tax Act, overview of Income Tax Act, and we have discussed each and every component of the income tax law. We have understand each and every component of income tax law. Number one is Income Tax Act. Number one is Income Tax Act. And income tax rules, Income Tax Act 1961, Income Tax Rule 1962, Income Tax Rules 1962, notification and circulars, notification and circulars, and case laws. Case law is also the component, and Finance Act. Finance Bill and the Finance Act will also be considered as a component of income tax law. So on the basis of such discussion, we have understand about the component of income tax law, component of income tax law. So thank you so much for watching this video. Okay, bye bye and have a nice day.